Now, when it comes to fund fees, we know that even the smallest percentage difference can make a huge difference over the long term over your total return. Now, as we know, the S&P 500 is a very popular fund for, investors around the world, and even famously becoming more popular because of its recent crash and then subsequent recovery, which took only weeks to happen. Now, everywhere on the comment section, I'm seeing this fund here, the SPXL or the SPDR or the SPDR S&P 500 fund. This allows UK investors to invest into the S&P 500 with the lowest fees that I've ever heard of. So in this video, we're going to explore, is the SPXL the cheapest way to invest into the S&P 500? Now, as always, these videos are made on Trading 212, and if you would like to sign up to Trading 212 and receive a free fractional share worth up to £100, then all you have to do is to click the link in the description box down below. Alternatively, if you've already signed up to Trading 212 in the past 10 days but have not received your free fractional share, then all you have to do is to click the 3 horizontal line menu over here. Scroll all the way down until you see the section use promo code, and in this section just enter my code JUBAIR and you should receive a free fractional share. Now, I know what most of you might be saying right now. What on earth is SPDR? I'm only used to Vanguard and iShares. Well, in fact, the first ETF to be launched in Canada was actually by the SPDR way back in 1990. And in fact, the first ever US ETF was by SPDR, the very famous SPY, which tracks the S&P 500. So the SPDR is by no means a new company. Like we said, it was the first ever ETF, so we don't have to worry about that at first glance. Now, if you are a UK investor into the S&P 500, you probably by now have heard of the Vanguard S&P 500, which I believe is the most popular way that UK investors are getting a slice of the S&P 500 action. Now, you can see over the past month, the return has been 7.98%. I made a video the other day talking about hedging on ETFs and how much of a difference that has made. But today I'll be talking about fees. Now, if you scroll down on Trading 212, you can see this very important number here called the expense ratio. Now, the expense ratio, sometimes also known as the TER or total expense ratio, and also sometimes known as the OCF. This is a percentage that the fund manager, for example, Vanguard here, takes out per year. You don't actually pay these fees. These come off the value of the fund. Like we showed in the beginning of this video, fund manager fees can take away from your overall return. Now, to be honest, 0.07% is a very, very low fund manager fee. You also have to mind that the broker that you choose, for example, Trading 212, might have additional fees. However, with Trading 212, we are very lucky because there is no commission on buying these ETFs. When talking about fees, however, it's very important to know that there might be other fees that I haven't mentioned in this video because they don't apply to what I'm talking about right now, but they still might exist. So what I'm talking about in this video are fund manager fees, 0.07%, which is really, really low. When we go into asset allocation, we can see the top 10 holdings are Apple at 6.99%, Microsoft at 5.84%, Nvidia at 5.5%, Amazon at 3.76%. And the reason why we're looking at this is because we're going to be comparing the VUSA with the IUSA with the SPXL just to see what the differences really are. So like I said, the VUSA is probably the most popular fund for, UK investors to get a slice of the S&P 500. Another fund, in my opinion, which is extremely similar to the VUSA, is something that is also spelt very similar to the VUSA, and that is the IUSA, the iShares Core S&P 500. Now, obviously, if you are a investor based in the UK, you're going to want to invest only in pounds and pence. For example, this fund is in pence, the VUSA is in pounds. If you are investing into a different currency apart from your local currency, then on top of your fund manager fees, you will have to pay a foreign exchange fee. On Trading 212, it is 0.15%. So please make sure you get the right currency, because then you might be saving on your, fund manager fees, but then you're paying all of that plus some more on foreign exchange fees, so don't do that. Anyway, you can see over the past month that the IUSA is up by 8.02%. Now again, very importantly, we can see that the expense ratio, or the total expense ratio, or whatever you want to call it, is 0.07%, so exactly the same cost as the Vanguard S&P 500. Now, what are the differences between this and the VUSA then? Well, if you scroll down, there are subtle differences in the allocation of things. For example, Apple is no longer 6.99%. Instead, Microsoft is at 6.84%, Apple is at 6.2%, Nvidia is at 5.94%. Now, what I do have to explain to you is that, iShares didn't just wake up one day and say, you know what, let's make Microsoft the top holding in our fund. What has more than likely happened is that the market cap for these companies, for example, Microsoft, which has grown incredibly fast over the past few months. As you can see, it is up by over 16.3% over the past month. Now, because this market cap has, gone up so much so suddenly, it changes around the balance of things, and instead of Apple being, number one as it is on the VUSA, the way that iShares manage the tracker is slightly different or not as updated as the VUSA or vice versa, and therefore there are small changes between the holdings. Nothing I would personally worry about. This is not a thematic S&P 500. For example, you can get an S&P 500 that just focuses on information technology, and that will be vastly different from the VUSA or the IUSA. And like I mentioned, these funds are also not hedged funds, which means that if you're investing into the USA and then the pound strengthens against the dollar, then your returns in the future could be a lot lower because the pound is strengthening, and when dollars get converted into pounds, for example, then the return in terms of pounds and pence on your fund is also lower. So as we can see, this is the fund that everyone is talking about recently. It is from SPDR. Now, over the past month, it is up by 8.16%. Again, past performance is, in my opinion, not a great indicator for future results. Probably not even my opinion. Universally, it is accepted that past performance can't predict. But anyway, you can see this is the fund. Unfortunately, on Trading 212, the details aren't there just yet. So I'm going to be using the website Just ETF, and this is the fund here. As you can see, the SPXL, this is the ticker code, as you can see here. Now, this is a UCITS fund, and without going into it too much, because I'm not Tom from Tom's Personal Finance, this essentially means that it complies with UK regulations and that as a UK investor, we can invest into it. But as you can see, the total expense ratio, like I said, it can be called many different things, or the TER. The total expense ratio is only 0.03%. This is 42% of the cost of the VUSA or the IUSA. In other words, it's less than half price of the IUSA or the VUSA. Now, what actually do we get with this fund? So under description, we can see that the SPDR S&P 500 seeks to track the S&P 500 index. The VUSA, the IUSA, and the SPDR S&P 500, they basically just track the same index. And essentially what an index is just a list of the companies that are, the top 500-ish companies of the USA. And then the fund manager will make decisions on how exactly they want to track it, if they want to hedge their currency or not. Now, this fund, compared to the VUSA, is very new. It was launched at the end of 2023, and already it is a very large fund with around 6.4 billion pounds in assets under management. Now, the assets under management, or AUM, is sometimes a good indicator of the longevity of an ETF. If an ETF is launched and many people aren't investing into it, then the ETF could actually potentially close. And if the markets aren't doing great at that time of close, then technically you could lose a bit of money. So a lot of people will prefer to invest into ETFs with a larger amount of assets under management, because the consensus is if a lot of people have a lot of money into a fund, then it's less likely that the fund is just gonna, cut and go. Now, in terms of holdings, there are subtle differences between the SPXL, the VUSA, and the IUSA. For example, Apple is at a massive 7.25% weighting. Nvidia is the next one at 6.07%, Microsoft at 5.85%. So there will be subtle differences between how, each fund provider and each fund will track the S&P 500 when comparing apples to apples and the exact percentage of their holdings. But again, I wouldn't really worry too much about this, as these companies tend to be pretty volatile anyway, and their percentage weighting within the index changes quite frequently too. So what do I think of the SPDR S&P 500, the UK version? Well, I think it is a very good thing that we have a very competitive ETF that allows us to buy into the S&P 500. I think 0.03% is extremely cheap, especially considering the fact that SPDR has to deal with foreign exchange. In the US, the SPY from SPDR is also very, very cheap. However, they don't have to change dollars into pounds, and therefore I think this is actually a better deal in terms of value. In fact, I'm actually committed to the SPXL because 3 days ago I started investing £10 every single day into it. And as you can see, I've deposited £30 and since then I am up by 13 pence. I'm going to be doing this for hopefully a few months and seeing what the progress is. I will keep you guys updated on my progress, but I'm actually very excited for this. So make sure to check out some of my other videos and I'll see you in the next video.